Hello, beautiful beings. Welcome to our beta version. If you are new here, my name is Elizabeth. You can also call me Les. And on this channel, I speak about personal finances and wholesome living. So if this is the kind of content that you are looking for, then you are in the right place. Just hit that subscribe button so that you can continue receiving videos on these topics. In today's video, we are going to talk about 13 investment tips of wealthy people. I know many of us want to be wealthy, we want to attain our financial freedom, but we might not always know how best we can get there. So looking at what the wealthy do and us implementing some of those tips can really assist us to get from where we are to where we want to be. Tip number 1 is long-term focus. The wealthy people tend to have a long-term focus when it comes to their investments. They are not looking at cashing in tomorrow, they are looking at many years from now. And as such, they avoid the temptation of chasing short-term gains. They are also not interested in the short-term fluctuations of the market because they have a long-term view of how they want their investments to perform. They buy and hold onto their investments, and they have strong fundamentals and will to grow over time. So they are really not chasing the quick fix or a quick gain. They are really looking at the long-term growth of their investments and the potential rewards of those investments in the long term. Tip number 2 is asset allocation. Wealthy people create tailor-made investment strategies for themselves and also tailor-made asset allocation for their investments. So they really look at their goals, their risk tolerance, and their time horizons to create strategies and asset allocation that really speaks to them. And as a means, they do not just invest in one type of asset class. They diversify their investments in different asset classes so that they have a balanced portfolio. So for instance, they don't only just dump their money into, let me say, startups. They put money in different vehicles so that they have a balanced portfolio. Tip number 3 is diversification. Wealthy individuals tend to spread their investments across different asset classes, across different industries, so that they minimize their risk. So they will have investments, for example, in stocks, in bonds, in real estate, private equity, and other different investments. And that is done as a way to minimize risk. So they understand that diversification is there to reduce your risk and to reduce your potential loss, especially big losses. So diversification is key. It's a key part of their investment strategy. They make sure that the assets are allocated in different industries and they are also allocated in different asset classes so that when one is not doing well, the others are performing and the losses are very minimal. Tip number 4 is investing in what they understand. Wealthy people tend to invest after they have done their research. So they do thorough research whereby they understand the risks that are associated with that investment as well as the opportunities that are involved with that investment before they make the decision to invest. So they really stick to industries and to sectors and to asset classes that they have a deep understanding of. For instance, before they go into an agricultural venture, for example, buying a farm and start producing food, they do thorough research. What is involved in farming? What are the key risks if I'm farming this type of plant or this type of animal? What are the opportunities? How is the market looking like? Where can I sell these things? If I don't sell, what do I do with it? How do I process, or who can I take it to process? So they really do that thorough research so that when they get in, they are informed by that research, and in that way they have a potential of really doing well in that investment. Tip number 5 is compounding. Wealthy people take advantage of compound growth or compound interest, and as such they reinvest their returns on their investments. They don't just, once the returns are in, they just spend. No, you get your dividends or you get your interest on those investments and you reinvest it in the same investments or in different investments that can still bring you more growth. So they allow their wealth to grow over time without necessarily pulling out the money prematurely. You know, sometimes you get excited, you see that you got a 10,000 payout from a dividend stock you own, and you are already thinking of how you are going to buy that new sneaker or that new outfit. That is not how the wealthy are thinking. The wealthy are already thinking, with that 10,000, I can buy this many number of shares in the same investment or in another stock that I own. So they really make sure that their money is getting that compound growth over time. Tip number 6 is tax efficiency. The wealthy tend to be really strategic when it comes to their taxes. They use tax advantaged accounts. They also use tax loss harvesting and other strategies that can minimize their liabilities, their tax liability, and keep more of their returns. So they really have a strategy, and they have a professional or a group of professionals that assist them to make sure that they are not paying tax unnecessarily, and they are able to avoid tax, legally avoid paying taxes. Tip number 7 is make real estate investments. A lot of wealthy people are invested in real estate. Be it residential real estate, be it commercial real estate, be it investment in property ETFs, be it investment in REITs on the stock market, they really find property investment is one of their key investment or asset classes that they invest in. They buy these properties, especially now the physical properties, they buy these properties and hold for a long term so that they can get the long-term appreciation and they can also get rental income. And real estate is seen as a hedge against inflation. So they really buy these properties and hold, and then they just list them out. So most of the buildings in your area or in your CBD or whatever, it's the wealthy people that are owning those buildings. Imagine owning a 7-story building or a 20-story building, and you are leasing all the units, be it a residential property, be it a commercial property. That is a lot of dividend income. But also you have the long-term appreciation of the property value itself. Tip number 8 is private equity and venture capital. Now, wealthy individuals tend to invest in private equity, venture capital, or startups. These are the type of investments that are a bit risky, because sometimes, for example, for startups, you are really putting your money into something that is yet to be proven. However, there are opportunities for high rewards. That startup that you put money in can really pick up and make you a lot of money. So they are often entering these investments as a part of the decision making, or they partner with trusted advisors who can then assist them with this type of investments. So it's an area that can really make you large amounts of money if the investment works out. Tip number 9 is philanthropy. The wealthy give back. Wealthy people are always giving back, and that is a major part of their wealth building strategy. And the giving back is also part of their financial strategy, whereby when they give to charitable foundations and they give donations, they get to offset some of their tax, but it's also for a personal value. Giving back gives you that sense of contribution to society. And as such, it can also act as a motivation to work even harder and achieve even more. Tip number 10 is financial advisors and experts. Wealthy people invest in expert advice. They have financial planners, they have financial advisors, they have tax experts, they have wealth managers, they have all types of experts around them to assist them manage and plan their wealth. All these experts are there to help them manage their investments. They delegate the tasks to the experts, and they don't need to do those things themselves. Like their tax planning, their estate planning, their investment management, they really give it to the people who are experts in those fields. Me and you, we are doing things ourselves. But really, as you are going along your investment journey or your financial freedom journey. You need to get to certain points where certain things you just have to bring in a professional. Of course, you might not be able to keep a person on retainer, but you can at least have a fee-based person that you go to for certain things that you really feel this one needs the expert to assist. Tip number 11 is avoid emotional investing. And we spoke about emotional investing in the previous video. Wealthy people usually are not swayed by emotions. They don't make their decisions based on fear or based on greed. So they are able to stay calm and make informed decisions on what they are going to do with their investments. When the markets are down, wealthy people don't rush into selling. And when the markets are up, wealthy people don't rush into buying. In fact, they do the opposite. When the markets are falling, they buy because then the stocks are on sale. But then when the markets are soaring, they can also see an opportunity in selling some of their investments, which was already part of their strategy, maybe to use that money for something else, or to invest it in a different investment, but they are not buying when the stocks are high and selling when the stocks are low. So their focus is long-term, and that is part of their long-term strategies. So emotions really do very little for their decision making. Tip number 12 is network and mentorship. Wealthy people tend to have access to strong networks of successful people, successful investors, successful entrepreneurs, successful business leaders. So they learn as much as possible from their network. They share their experiences, they share their insights, and they are able to collaborate on work and on investments. So they really capitalize on that strong network of other successful people. Listen, guys, wealthy people love other wealthy people, and they like working with other wealthy people. When you are thinking on a certain level and on a certain frequency, and you are surrounded by other people who are thinking on the same level and on the same frequency, you are bound to really work together and see things from a similar perspective. So they really capitalize on that strong network, and they learn as much as possible. And of course, they are able to also collaborate. They are able to get mentorship. They are able to get assistance. So it's many things is just a phone call, and then they are sorted. Tip number 13, which is the last one, is continuous learning. Wealthy people tend to constantly be learning. These are some of the people who read the most books. These are some of the people who attend the most seminars. They go to all these business platforms and expos and things, and they really invest their time in learning. Only when you are learning, you are able to bring change in your own life and when it comes to your investments. If you are someone who wants to be wealthy, reading is part of that. Read books, attend seminars, seek advice. Whatever platforms you are able to learn better from, maybe you are a podcast person, but you are not a book person. Maybe you are an audio book person, but you are not a physical book person. Whatever works for you. What is important is that you are constantly learning. You are constantly educating yourself. We have looked at the 13 tips of investing like the wealthy people do. And if you are not already implementing these tips, start today. See which ones you are able to implement and start. And I'm sure you will see some great changes in your financial life and also just in your overall life in general. And if you have found value in this video, leave a like, comment, and subscribe to the channel so that YouTube can show these videos to other people who might find them useful. And I'll see you in the next one.